Mitch and Tom, is it fair to say that this phenomena of interest in OpCo-PropCo structures, REIT conversions, spin-offs, is all the result of this increased demand for yield-based product by the capital markets?
Byron, I couldn't have said it better myself. So it's capital flows, it's growing economies globally, and it's the disaggregation of risk and investors wanting to buy the risk that they want and getting it priced right. So if you look at historical yields on equities and you look at historical yields on real estate and you compare them, you'll find that real estate cash flows are much, much more durable and less volatile than stock yields. And as a result, investors who want to be defensive, investors that want to have a predictable income stream are going to sort of rotate towards these types of assets.
So as we think about serving our clients internally, this real estate discussion really is a C-suite and boardroom discussion for every business, regardless of the sector they're in, that uses real estate.
And I'd add to that, I mean, the discussion that we just had was more around the demand for the product. I would also say it has a supply element to it as well, because the folks that are using the real estate, many of them, because of the trends are going on, are looking for significant capital sources to expand, additional infrastructure, additional assets, growth capital.
And that capital could come from the real estate.
From this real estate opportunity.
Understood, yeah.
And it's interesting, Byron, to your question, I've had more conversations in the last 12 months with non-real estate, traditional real estate clients and contacts than I have with real estate ones around real estate. So the real estate, typical fund-based owner-operators, what's happened in the industry is sort of within their grasp, but more corporate C-suite boardrooms are really starting to focus on the balance sheet, what's on it, what's not on it, and what the right answer is for their business strategy going forward.
Well, and I think some corporations are sitting on real estate where they have forgotten how valuable it might be.
And their view of that real estate may be 10 years old.
Yes.
And 10 years ago, we were in a completely different period in the cycle.
If you have high value assets, you get into, well, what's right for each company? Well, the answer may depend on the company.
So it could be a sale leaseback, it could be a securitization, it could be a sale, outright sale.
Joint venture.
It could be a joint venture, it could be a spin, it could be an OpCo-PropCo split.
And that evaluation will depend on their facts and circumstances, what they're going to use the capital for. Can they effectuate a tax-free spin? Is there a significant gain on a sale leaseback? And you get into all the trade-off issues that go around those types of transactions.
And what their operating strategy is for their business going forward, and how to marry their growth expectations for their underlying business with the assets they need to grow that business, and whether or not they need to own them or they can just rent them.
All the more reason for us to be coordinated in our service offerings around the valuation work that you can do, the spin-off conversion tax sensitivity, Tom, that you and our tax group can do, as well as our eyes and ears around the firm in dealing with our clients for identifying opportunities where we can add value to their needs, to at least open the discussion and then try to take appropriate solutions to our clients.
That's right, and Mitch alluded to it earlier, there's also some accounting issues coming in terms of the changing in the lease rules that may make the difference between owning and leasing much less of an issue than they have in the past, and changing that dynamic may significantly affect how corporate real estate users, be it traditional or non-traditional real estate, think about what they could and should do with respect to their real estate.
And what's interesting about it, if your balance sheet looks exactly the same, if you own or rent, the owners are going to say, maybe we should rent, and the renters are going to say, maybe we should own. And so again, there's no prescriptive answer to this, but it's causing a discussion in the boardroom about what's the right answer.
What's the right answer, and how much should we keep, how much should we sell, what should we do, and should monetization drive the discussion?